Welcome to Friday Takeaway. It is the last trading Friday of the year and it's construction that holds our interest, Eversendai and TSR Cap. But before we get into that, after a fairly alarming Monday where you had so many people calling a bear market, the Dow saw its largest single-day point gain in its history of 1,086.25. It has come off its high a little since then, but that is to be expected. Reports say that investors were less anxious as it became clear that President Trump wouldn't be firing Fed Chairman Jerome Powell despite threats to the contrary. This is important because you can't have a Federal Reserve that takes marching orders from the White House. Back in KL, apparently the government is in a very giving mood. Finance Minister Lim Guan Eng has announced that petrol prices will be based on a weekly float system next year, which doesn't sound like a good thing. But given the recent weakness in oil prices, this means lower petrol prices in January. It will also be capped at 2 ringgit 20 cent per litre for RON 95 and 2 ringgit 80 cent per litre for diesel. The Cabinet had also decided on December 12 to freeze all toll rate hikes on 21 highways across the country that are eligible for an increase next year. Sounds good, but there is no such thing as a free lunch because it will cost Putrajaya 973 million ringgit. More bad luck for the Genting group as it found itself embroiled in yet another lawsuit, but this time on the receiving end, for its Resorts World Las Vegas property. US-based Wynn Resorts is claiming that Genting's Vegas casino has similar architectural design to Wynn's properties in Vegas and Macau. Genting will file a response to Wynn Resorts on or before January 14 next year. In this week's This or That, we delve deeper into the construction sector, specifically its smaller cap players. After the change in government, the construction sector has had it a bit rough, but slowly you see confidence returning. We start with Eversendai Corp, which announced over 321 million worth of new contracts has overseas exposure, but analysts don't seem to be biting. On the other side is TSR Capital, which also bagged a contract this week. But is it the property arm that we should be taking a closer look at? So, let's put them head to head. Started in 1984, involved in turnkey contracts managing projects for high-rise buildings, power plants and oil and gas. It has done more than 300 projects in 14 countries, and it has worked on some iconic buildings such as Burj Khalifa in Dubai, Petronas Tower 2 and Kingdom Center in Saudi Arabia. For the year to date, Eversendai has managed to clinch new contracts worth a total of 1.44 billion ringgit from Singapore, Qatar and India. Sounds like a good thing, right? However, both Kenanga and TA Research are not impressed by the wins, with TA lowering its FY18 order book replenishment assumption to 1.44 billion ringgit from 1.5 billion. TA says that the valuation of the stock at current levels is unattractive, plus its net gearing level is still a concern at 1.05 times as of September 2018. Kenanga is also in a similar vein, thinking that Eversendai's valuation is at its lower end, given its extremely volatile earnings and thin margins for its India and oil and gas operations. The group, however, is positive with the market environment in the regions it operates, as these countries continue to dish out commercial, residential and infrastructure projects. With its outstanding construction order book of about 2.43 billion ringgit, TA Research says it will last them for up to 1.5 years. Group MD Tan Sri A.K. Nathan says that it is pleased with its order backlog as they should keep them busy over coming years. And given that it has a large presence overseas, that will help to give some breathing room if the construction sector back home goes through a rough patch. Taking a look at its share price, it closed at a high of 1 ringgit 8 cent in June this year, but it didn't manage to hold on and dipped to a 2-year low of 49 cents about 2 weeks ago on December 13. But the recent contract win news did put some bounce back in its step. Analyst consensus shows 2 sells and 1 hold on the stock, with target prices ranging from 51 cents to 1 ringgit 5 cents. Founded in 1991, formerly known as TSR Bina, TSR Cap is in the construction and property development business. To date, it has built construction projects at home worth more than 5 billion and has done work on MRT Depot Kajang, Jawi Prison, UITM Bukit Besi and Lebuh Raya Pantai Timur. Their property development is PD Waterfront that sits on a 100-acre overplot with a GDV of more than 1 billion ringgit. This week, TSR Cap bagged a 79.8 million ringgit road project at Kuasa Damansara Township Development in Sungai Buloh. According to the company, it will contribute positively to the group's earnings until FY 2021. And in the week before that, TSR Cap together with WCT Holdings clinched a 676.8 million ringgit contract for the construction of an 8-storey shopping complex at Merdeka 118. It will form a joint venture vehicle with WCT in a ratio of 49:51 for the contract. They are expected to start work on January 2nd next year and complete it within 30 months. For the 3 months ended June 30th this year, it registered a net loss of 4 million ringgit due to lower project margins achieved for certain projects. Although on the positive, it returned to black in the first quarter of FY19, which actually ended in September with a net profit of 633,000 ringgit. The group says it cautiously expects the performance of the group in 2019 to be satisfactory. No analyst covers the stock, but if you look at the first 6 months, its shares have been hovering between 47 cent and 54 cent. It dropped to a 5-year low of 30 cent in mid-December, but it has seen some rebound following the recent news.